by 221 to 201, and now goes to the Senate to be approved. Now, the measure doesn't set a new figure on how much America can borrow, but it does say the government will be allowed to borrow as much as it needs to fund itself until March 2015. This dramatically reduces the chances of another fiscal showdown in the United States. The Treasury Secretary Jack Lew had warned that America risked running out of cash by the end of this month if the debt ceiling wasn't raised, so that crisis looks set to be averted for now.
Another story from the US, this is the woman that can move markets.
Yeah, Janet Yellen, the new chair of the Federal Reserve. Everyone was watching very closely as she addressed a congressional committee on Tuesday. She signalled continuity in the Fed's policies, much to the relief of the markets, it has to be said. That means that the Fed plans to continue reducing the stimulus it's providing to the American economy, provided growth matches up. And they'll also be keeping interest rates low to stimulate that recovery. The central bank stimulus pushed the markets in the US and in Asia to record highs last year, but fears that the money tap would be turned off had caused jitters in emerging markets in recent months. That's an effect that Janet Yellen shrugged off as she focused on the domestic US economy.
My colleagues on the FOMC and I anticipate that economic activity and employment will expand at a moderate pace this year and next. The unemployment rate will continue to decline toward its longer-run sustainable level, and inflation will move back toward 2% over coming years.
And the markets were very pleased with those words from Janet Yellen. The Wall Street rose steadily as she was speaking to that congressional committee. The Dow and the S&P 500, in fact, the Nasdaq as well, ended up over 1% at the close of business. Investors pleased with both the Fed's upbeat prognosis for the economy and the fact that Janet Yellen is set to continue those policies set by the predecessor. One thing the markets do like is certainty, and that's kept them pleased in Asia as well. As you can see, positive territory across the board. Over in China, new figures show that exports grew at a rate faster than had been expected. 10.6% they were up in January compared to the same period last year. Imports also up by 10%, but there are some economists casting doubt over those figures and how reliable they are. The market's pleased nonetheless, though, both the Hang Seng in Hong Kong and the Shanghai Composite up over 1%. The Nikkei in Japan, too, also in positive territory, but just some news coming out from the car maker Toyota there. It's announced that it's recalling 1.9 million Prius cars to update their software. We don't have any more details on that for the moment, but we'll keep you updated throughout the morning.
Unreliable figures in the business bulletin, never. Now, Stephen, take us through some of the day's companies news, can you?
We'll start with Airbus, which has signed a deal to sell 20 of its A380 Super Jumbos in a deal worth $8.3 billion. The planes are being bought by the leasing firm Amedeo, formerly known as Doric. It's a boost for Airbus, which has seen sluggish orders for the A380 as airlines shy away from the Super Jumbo model. Danone has paid more than €500 million to double its stake in China's largest milk producer with this 9.9% share for $486 million. The French food giant sets to become Mengniu's second biggest shareholder. It follows the success of a joint venture from the firms to produce and sell a line of yogurts in China. And the insurance company Allianz has taken a €110 million stake in Bayern Munich Football Club. The firm will hold just over 8% of the club, equal to shares held by its other two strategic partners, Adidas and Audi. The company already sponsors the Bayern Stadium, known as the Allianz Arena.
Unusual story for you now. Mobile gamers all over the world, they were very, very disappointed last weekend. A firm favourite was removed from sale. Now we have an idea why.
Yeah, we were talking about this on Monday. Flappy Bird is the smartphone game that was taken down over the weekend. It's where you guide a little bird around a series of obstacles. You can see some of the images from the game there. Despite it being quite simple, it was a massive hit on downloads. It reached the #1 spot on the iTunes store, partly because it was so difficult. Some users claiming, in fact, that it had ruined their lives because they were working so hard on it. But on Saturday, the creator Dong Yang announced he was pulling the game from sale. He didn't say why. Many gamers sent into mourning as a result, and phones with the game already downloaded were selling on eBay there was one advertised actually at over $100,000. I don't think that's sold, though, it has to be pointed out.
No.
He's finally explained why. He says that it's because he never intended the game to be one that people would play for more than a few minutes. He said it was just too addictive. that was why he had to take it down. This was a part-time occupation for him, and he says it just all became a little bit too much.
Poor old Flappy Bird. Has your life been ruined by that then, Stephen?
I'm recovering slowly.
Very slowly. Stephen Carroll with Business on France 24. Thanks a lot. Now, we've got some juggling coming up for you in web news. It starts